So now let's get into how we enter on this type of scenario, and it's with a candle that is very noticeable in what I term the stop hunt candlestick entry. So what we have is our technical ranging market pattern, where you will have the level traders first of all getting involved, right? And they will place their stop losses here. Then you have stop hunt right here, and breakout traders will be getting in. You have a pullback into an area of resistance, resistance, resistance. Now should become what? Support. You see some convincing price action, pin bars, engulfing candles, that gets traders involved in buying here. And once they're involved in buying here, they place their stop losses in this area here, right? In this box, because that's the only place they can. Yes, there's going to be some traders that will place their stop losses, in this area, but in general, retracement traders and level traders will place their stop losses below the level, and this is due to things like risk reward ratio, where they don't want to have too much risk and they want a lot more reward for their risk. Now this area is crucial. This area here is where we want to enter, and what we're actually looking for is, let's get rid of this. We want to see a candlestick that closes in this area where retracement traders have gone long. Yeah, so the absolute swing where this would represent stop losses, right? And we want to see a candlestick, a bearish candlestick, yeah, that closes in and around below the swing of where retracement traders would be getting in. And once we see a bearish candle close here, that's pretty much where we want to enter. It is literally as simple as that. And what I'll do is I'll clear that, and I'll show you obviously an example. And for a buy trade, if this is the ranging market, what we want to see is this pattern happen, and when prices come up to, again here, this is where retracement traders would be placing their stop losses right here. Let me just delete that, make that red, because they're expecting what? Price to continue going to the downside. Yeah, we want to see a failure in that expectation. Once we see bearish price action against the level of what we would know as, I guess, support, should turn to what? Resistance, and this is where the stop losses are. Yeah, and what we want to see then is actually a bullish candle that closes in that area where they would place their stop losses, and exactly the swing, right? So when I say the swing, I mean the highest point, price point at which prices start to turn around from there. And we want to see a close, a candle close, a bullish candle close above that swing point and into where their stop losses would be if they were getting short. So this is how we enter and take advantage of the stop hunt scenario that the financial institutions convince retail traders, and how they convince them to enter short when they really want to go long. So let's look at that on a couple of price chart examples.